The views and opinions of this program are those of the host, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. Today's episode of Market Talk is brought to you by Growmark FS. Keeping up with the latest in ag is a challenge, to say the least, but there are experts nearby ready to help. You'll find them at your local FS. You can trust them to bring you customized agronomic, grain, and energy solutions born of the latest thinking. That's because FS specialists receive continuous training that keeps them current on the latest trends, practices, and technologies. So you'll get local expertise that's both exceptional and up to date. Visit fssystem.com to learn how FS is bringing you what's next. Well, as we continue to examine the grain and oilseed market and the weather-driven rally to wrap up the week heading into a 3-day holiday weekend, we take a deep dive into what we're seeing and we talk about bigger picture items here in this grain trade. Joining us now, we have Steve Nicholson. He's the Global Sector Strategist for Grains and Oilseeds with Rabobank. Steve, great to catch up with you again, sir. Hope you're doing well.
Great. Thank you, Jesse. Great to catch up with you as well. Good to have a conversation this time of year.
Yeah, good to have a conversation this time of year. And, you know, we set this interview up a few days ago, and it was before the powder keg got lit, so to speak, in the grains and oil seeds. But man, oh man, what a weather rally heading into the 3-day holiday weekend. And I look at some of those closes. I mean, up $1.38 in November beans, up almost a buck of corn. What an impressive rally into a very key holiday weekend, Steve.
Yeah, absolutely. I think the fireworks powder keg is people buying their fireworks early this year, I guess. But it is an awfully impressive rally, and you worry a little bit when you make that move so fast. But I think it's like we said before we came on the air. I mean, after the war, was $8 corn fair value for corn at that point? Probably not. And I would say the same thing. Where we've been the last 6 months is low $5 corn or even upper $4. Is that a true value for corn? And it isn't really. And we've got to find a middle ground someplace. And I think we're trying to come back to that. But I think certainly the weather has been the big driver here. Everyone came into the year like, we're going to build stocks. We're going to have a huge corn crop. We're going to 185, 181, 183, 185 bushel yield. We're going to do 52 bushel beans. And I will tell you, and not to, this is a little bit tooting our own horn, I guess, a shameless commercial, as Click and Clack would say. We were skeptical of that coming in the year. We feel a little vindicated at the moment because we're at 179.5 on our baseline for corn this year. And we just thought between coming out of a drought last year, and it's not an 88 or 12 style drought, but the fact that you're coming in on a short moisture situation, and you're not getting, I'm looking out my back door here, and you're just not getting the moisture. This is exactly what we expected could potentially happen, and it's happening right now. So, and it's also the other thing I would say is that when we think about, to me, on this downdraft, it's not like there was a divorce between the fundamentals and reality. But when you have money in the marketplace, that money got out, and now I think that they're short. And people have got to get back in and get even up, or they're going to be in a bad way very fast.
Well, talk a little bit about some of that money, some of that role of the funds in this market environment, because it felt like there was a lot of short covering to wrap up last week by those fund traders. And so talk to us a little bit just about where the funds kind of stand in this market, because to your point, and we were kind of talking about this, it's almost like we're not necessarily trading the fundamentals. The funds are more trading chart signals and weather forecasts now.
Yeah. And I think I'm going to add one thing to your comment there too. I think it's also trying to understand where are they in the marketplace as far as money itself. You have higher interest rates. The system, the Fed is trying to pull liquidity out of the system because it's flooded the system and has inflated asset value. So I think that's part of what's happening as well. And from a funds perspective, if you're trying to get investors, I've always said it's easier to sell the bullish story than the bearish story. And they've sold that bearish story, down the river if you have it, and now gotten themselves where they've got to get back on board. And you can point to the weather and go, see, I told you. Here we need to get back in because it's going to be a dry summer. But I think the funds, there's always the argument: do the funds lead the market or do they follow the market? And the funds will tell you they follow the market, and it's all about it's their algorithm and their black box. It's a technical. They're looking at charts. whatever the case might be. But I think from a technical perspective, when I look at whether it's wheat or whether it's corn or even soybeans, they've acted from a technical perspective fairly rational. Find those support and resistance places, go there, sit there for a while, try to figure out what to do. Then they go back. They either go back up or they come back down to the next support area. So they've acted fairly rational from a technical point of view. It just maybe fundamentally doesn't seem like that. But I think that's where the funds are. And now they're looking like, I've got a bullish story I can sell, and we're a little short, so we need to get evened up, at least get evened up here.
I want to throw another piece into this conversation too here, Steve. Coming up at the end of the month, obviously, we have the quarterly grain stocks and acreage report. Yep. Very, very big report traditionally. Yep. I want to also think about this through the lens of the demand portion of this, because demand for U.S. grains right now is not that great, it feels like. So can you tie all this together? Because obviously we got a big milestone in front of us, and then you have demand on the other side of this weather rally right now.
Yeah, no, that's a perfect question, and it's a question that's I think we're concerned about a lot of ways. And I'm going to focus on corn first, because that's the one that's the most troubling. When you think about corn and you think about what's happening with the feed side. Now, I always remind people it's feed and residual, not just feed. And I think people have to remember, and I'll give you a couple of statistics, and maybe I'll just say, so if you look at USDA, what they said for feed and residual for this year, it was down about 7.7%, 7.5% from a year ago. And you think, gosh, that's a lot. Boy, demand's already getting destroyed. If you look at the supply side and look at that from a production, how much production do we lose this year versus a year ago? Guess what? It was about a little over 7%. So that makes sense. And so I want to just point that out to listeners that, if you have a smaller supply, you have smaller demand. So just keep that in your background and think about that. But I think you're exactly right. From a longer term, where do we find demand for corn? We certainly have some challenges in front of us. And let's talk about feed and residual. You certainly have a liquidation in the cattle market, particularly in feedlots in the Southern Plains because of drought. The swine industry has gone through wrenching margins. We've seen some bounce back. That's the good news. But those margins don't correct themselves overnight. Just that's a biological cycle. And the only livestock side that looks really strong is poultry right now, because from the consumer's perspective, that's the best value in the meat case. I'll just plug pork and say, that's your best value in the meat case right now as a consumer is the pork side. So, you've got some headwinds in front of you on the feed side that we have to kind of get through. That's going to take a year or two to kind of get over and see the feed and residual come back. But then when you start to think about exports, that's a real concern, because Brazil certainly has a big crop, and they're going to harvest a big crop. Ukraine is going to be a bit of a challenge as we go forward, because they just don't have the production they did last year. And we still have the Black Sea Grain Initiative going, but we're on this 60-day roller coaster of like, are we there? Are we not? That sort of thing. And so is the U.S. going to be there? But then you have the whole ethanol challenge. And ethanol at best is flat going over. And we look at our 10-year baseline and we say it's basically flat to a little bit decline over time. And so you think about, where does the new demand for corn come from? I do think the feed side will come back, because the consumer has more money in their pocket. And I think that's a general broad statement. But the consumer globally has more money, and you brought more people out of poverty that are willing to spend money on animal protein. So that means that's good consumption for corn. You do see new technology coming along on the corn side to produce more biodegradable packaging, and a bigger push for biochemicals, which tends to come out of the corn side, because you can do a lot of things with that starch. So I think there are some challenges on the horizon for corn, and there's some bright spots as well. But overall, when you look at corn, wheat, and soybeans, U.S. corn, wheat, and soybeans is priced out of the market versus our competitors, primarily Brazil. Now, the soybean market, different story. Margins are good. There's a lot of demand for the oil. The meal will be the issue as we get into 3 to 5 years down the road here. What do we do with all the meal? But the demand for soybeans continues to be very, very good. And I think despite China will continue to need soybeans, we know that Brazil, Argentina will have a weather issue. And so I have to be on the optimistic side of that, as we'll be okay. Wheat, we're never a big player unless someone else has a problem on the wheat side. And we see that Australia will have a smaller wheat crop this year. You do have Russia having a bigger wheat crop. EU is scheduled to have a big wheat crop, but it's turned very dry there as well. India is scheduled to have a big wheat crop. The monsoon, yes, is late by like 3 days, but there's a lot of variability around that monsoon forecast. The official word is it's 96% of normal, but you look at private weather forecasts are about 60%. So we're at a bit of a kind of a lull, we'll say, in U.S. demand.
Well, Steve, there is so much going on in this market. Final thoughts here. The next 30 to 60 days, if I'm a farmer, I'm looking at my marketing plan, I'm looking at my crop, et cetera, et cetera. It just feels like there's a lot that you need to at least take a step back and take a look at and not be complacent.
No, absolutely. That's exactly the word I was going to use, complacent. I think, people said they got bearish on the downsides and got woe is me sort of thing, or hot dog is going to get a better buy from me. But when you look at the board and see what it's done, I think you're absolutely right. Do not get complacent here and think, oh, it's going to go higher. Understand where you are and can you make a margin and can you reach your profit goals? And if you can, and you haven't put anything on for 23 crop, then I think you need to do it. Now, if you have something done booked for 23, then you have a little bit more cushion to work with. But again, your word of complacency is absolutely correct. Let's not get complacent here and get bullish, toward the top.
Well, great thoughts to consider. We appreciate the time and the outlook in the markets. With that, global sector strategist for grains and oilseeds with Rabobank, Steve Nicholson. Thanks so much, sir. Have a great one. We'll talk to you soon.
Thank you, Jesse. Good to talk to you as always.